China's stocks on Tuesday flitted in and out of negative territory but turned positive as the startup index gained on fresh regulatory reform, while investors awaited big banks to release their earnings after a tumultuous first quarter. Japanese stocks ended steady on Tuesday as investors booked profits after sharp gains in the previous session, while a raft of better than expected earnings results and forecasts supported the major indexes. We'll take a look at the numbers of the Shanghai Composite Index, down to 2,810 points, the Hang Seng up 24,575 points, and the Nikkei sitting at 19,771, my apologies. Let's go to Wall Street now, where Wall Street gained more than 1% at the onset of a chaotic earnings week as investors turned a hopeful eye towards several US states that are relaxing shutdown restrictions put in place to curb the spread of the COVID-19 pandemic. All three major US stock averages advanced and are all now within about 20% of their record closing highs reached in February, with the benchmark S&P 500 on track for its best month since 1987, after trillions of stimulus dollars helped US equities claw back much of the ground lost since the coronavirus crisis brought the economy to a grinding halt. The Dow Jones Industrial Average rose 1.51% to 24,133 points. The S&P 500 gained 41 points or 1.47% to 2,878. And the Nasdaq Composite added 1.11% to 8,730. Let's take a look at the other markets. And let's continue taking a look at what's happening in the markets. I'm joined on the line by independent analyst Chris Gilmore. Chris, a very good afternoon. Thanks so much for your time on SABC News. Developing world stocks and currencies fell on Tuesday. That's been partly attributed to a fresh plunge in oil prices and a lack of appetite for risk.
And Zinga, yes, good afternoon. You're quite right. We're in what's called a risk-off situation at this point in time, which basically means that investors and speculators alike are eschewing the emerging markets and preferring to stay with so-called developed markets and where they see a bit more security, for want of a better expression. And yes, things like the oil price falling, and we'll come on to that in a bit later, I suspect. You could also use as a proxy for this the copper price, because when you're looking at commodities, these commodity prices, when they're falling, many of the countries in which you are talking about, emerging markets, are producers of these commodities, and therefore they're going to be getting less for their output.
Okay, economies that are a bit more advanced, like New Zealand and Iceland, appear to have gotten some sort of control over the coronavirus, and unlike some emerging markets, now starting to open up their countries again and get their economies going.
Yes, indeed. Now, Iceland is fascinating. Only 365,000 people. I mean, it's a very easy one to look at. So they were able, from the outset, to do containment and tracing and this type of thing. New Zealand, slightly larger, 4.4 million people. But there again, I think they've only had 9 deaths in total. So I saw an article yesterday that says that they're on top of the situation now. Mm-hmm. So, they have borders that they can close. There's nothing leaky about them at all. You can close them with impunity. And they've been very, very successful. So now you're going to see this gradual opening up of places like Iceland and New Zealand and quite a few other places.
Let's go back to that oil price. We saw the WTI futures falling about 17% earlier and Brent crude oil falling below $11 a barrel. What's happening now and why is that happening?
Okay, WTI, this is more of an American proxy, and it looks really at the oil price in the continental U.S., and that's currently trading around about $12 a barrel. Last week, you had this strange anomaly where the WTI futures, which on a one-day futures contract, fell to, wait for it, minus $37 a barrel. And there are suggestions that with the upcoming contract, the futures contract in May, on the 19th of May, it could fall even more than that. The reason for this is a shortage, an acute shortage of storage capacity. So you're looking at storage capacity not just in the continental U.S., but on tankers off the coasts of America and elsewhere. There's a massive glut, huge glut of oil, and it can't be accommodated. So basically what is happening is that while you've got this glut and the global demand is so low because of the coronavirus, the oil price is collapsing. It's particularly important and it's particularly serious for the U.S. shale oil industry because that needs much higher prices than are currently the case, probably way north of $30 a barrel, even for the most efficient ones, and substantially higher than that for the less efficient producers. But I suppose a self-correcting mechanism of sorts will eventually kick in as many of these shale oil producers in the States go out of business, because many of them are highly geared as well. So there could be a lot of supply being taken out of the market in the not too distant future, and that should, all other things being equal, result in the oil price perhaps improving a little bit.
Let's stay with commodities. The gold price also falling about 0.6% this morning, the last time I checked. Is that significant?
Not really. You've got to bear in mind that a lot of that action in the gold price is happening because traders of whatever description are using gold as a convenient thing to sell if they need cash at the margin. Gold's true behavior as a means of protection in financial Armageddon, I think, has not yet come to the fore. So I think this is more of a kind of holding pattern for gold, and it's probably going to go quite a bit higher.
Okay, Moody's Investor Services downgraded its outlook for South Africa's local banking system. Do we know why, and what does that mean?
Yes, I think really what they're taking a negative outlook on the economy generally, and they're looking at the incidence of bad debts increasing significantly, and that they see as impacting very, very negatively on the banking sector. So if people are losing their jobs, they're not able to repay their loans. If industries are going to go bust, ultimately the banks will have to carry the can. Look, the liquidity situation of these banks has been improved dramatically with the actions of the Reserve Bank. But nevertheless, I think the whole sector will take strain, and I think this is a reflection of that.
Let's try and take a quick look at company news before we wrap. We saw the story of the National Credit Regulator suing Pepkor. Why and what happened to their share price?
Share price hasn't really done very much, but this is the old Steinhoff Retail Africa Group, and it's a subsidiary of theirs called JD Group. And what's been happening in Zynga is that they've been bundling a whole host of insurance services into the monthly repayments. Many of them, in fact, all of these companies, these hire purchase companies in the furniture industry do that. And the National Credit Regulator views that as many of those insurances being unnecessary. So, for example, unemployment insurance for pensioners. I mean, completely unnecessary, crazy stuff. So they're saying, no, you can't actually do this. A similar thing happened with Lewis about 4 or 5 years ago. So we have to wait and see what happens. But I think the market is taking the view that probably not much will come out of this because we've been down this road before.
Okay, so First Rand is saying they need to make significant revisions to their macroeconomic forecast and withdrawing their financial performance guidance. Will we see more of this?
Absolutely. I think I was at that presentation back in February, I think it was, when First Rand gave the presentation. And it was a fairly sobering sort of presentation at that point. And this was long before we had the COVID outbreak. So now I think all that they're doing is rearranging their macroeconomic outlook because that's changed significantly. And the guidance that they gave was cautiously optimistic at the time, and that's obviously changed. Then I think all of the banks and many other companies as well are going to be changing their outlook materially in the wake of what's been happening in the past few weeks.
Chris Gilmore, independent analyst, thanks so much for your time. So much to get through, but that's where we leave it for now. It's time for a short break.